Well, Jerry, I hear the church bell's ringing, so I think that means it's 9 o'clock.
All right, I've just checked with the Naval Observatory and it's 9 o'clock straight up. So here we go. Hi, good morning, everyone. This is Jerry Muir. This is our final VITA session, Zoom, and let's go ahead and get started. Okay, so today we will talk about some assorted topics to include the type of tax preparers that some of our VITA clients will end up going to because of the out of scope return that they may have. And we'll talk about certain topics for IRS and FTB. And then we're going to jump into two returns, the Lisa and Robert Walters, and then the Maria Adams. And the reason we're focused on tax year 2023 right now is the IRS has not yet loaded the state returns in the practice lab. So when that happens, obviously you can practice tax year 2024, both federal and state. This session will last till noon, no later than, and we'll take breaks at approximately 10 and 11. And just a reminder, if you are newer to the VITA program at St. Killian's, there is a whole cast of characters who support the program, starting with Susan Armstrong. She's a business manager at the church. And then we have a number of other players as shown on the screen here. And then I'll call Sean. Sean, do we know who's going to be our site coordinator? Will it still be Mel, or are we going to have another one who steps in?
Um, was still going to be Mel, but Robert's the assistant site coordinator, and I imagine Robert's going to find himself doing a lot more this year than he has in the past.
Okay, very good. And then for those of you who have not met Robert, Robert has been the assistant site coordinator at a couple of places to include Coastline College. He's got a season under his belt. He's taken a few tax classes. He's a pretty sharp guy, and he'll definitely be a good selection to help out Mel, or for that matter, even replacing Mel if Mel can't come back. And I think with that, I think we'll go ahead and continue. Now, this is kind of a busy screen, but I do want to kind of revisit this because there's a lot of references in the VITA program. Your go-to reference, as we've talked about a number of times, is the IRS publication 4012. And the 4012, you'll have that either in a hard copy form or sometimes you'll use the soft copy, the electronic copy. But that is your go-to document, especially when you have questions regarding out of scope. And you will bump into a number of VITA clients that have situations where we can't help them because, again, we're not trained to do certain types of returns and they would be deemed to be out of scope. And we'll give you some pointers when an individual has an out of scope return, the courses of action that can be taken. At the very top of the screen, it talks about IRS publication 501. And this is also important to kind of revisit. Those IRS publications, there are literally, I think there's well over 1,000 of them. Now, for the purposes of VITA, you probably maybe looking at maybe a half a dozen of them, if that. And publication 501, like the other publications, they are typically revised on a yearly basis. Some are not revised every year, but they are revised as need be. And they're revised by IRS employees. They take the tax law, they'll go ahead and put it into easy to understand terms in the publication. And then IRS attorneys will review those publications for accuracy. And obviously, they have to follow the tax law. And then once that happens, then the publication is indeed published and it's available on the IRS website. All of these publications that say IRS Pub, they're all available on the IRS website if needed. And typically what happens is when you're digging down into a publication, usually you're going to a specific page or a specific topic. chances are you're not going to read the entire publication. But again, they're available, and your site coordinator and the folks at the VITA site, they'll give you the guidance that you need. But again, a lot of material available, and so typically you're going to be able to find the answer at the VITA site, looking at some type of IRS publication, or if need be, a franchise tax board publication. And then, of course, there's always the VITA hotline. The VITA hotline is for VITA volunteers. Usually, the site coordinator is going to call, and that goes back to IRS personnel that can help out for again tax questions that are within scope of the VITA program. And then we mentioned before the VITA sitemap. This is a treasure trove of information regarding income, credits, deductions, and then at the very bottom of the sitemap, you actually have a section for tax professionals. And that's something you're not going to attend to because you are a VITA volunteer. And so again, the sitemap would be for taxpayers, VITA volunteers, with the exception of that section that has that is geared towards tax professionals. And also, we mentioned the sitemap is updated on a regular basis. The last time it was updated was in October of this year. And then your forms, obviously you're going to get very familiar with not only the IRS forms, but also the franchise tax board form. And the forms for 2023 are obviously published on the IRS, excuse me, the franchise tax board website. And again, you'll get real familiar with that. And this is important when you are at the VITA site. What happens is you're preparing a return electronically, and then you're going to print out a copy, a courtesy copy for the taxpayer. And a lot of times the taxpayer may ask you questions pertaining to the form. And again, that's where you're going to get familiar with walking through the various lines on the form. And if you do have any issues, and of course you bounce it up to the site coordinator, keep in mind at the site you have people who are essentially, I'll use the term tax specialists or maybe tax experts, individuals who have a lot of experience with taxation. And so if you have that $64,000 question, you're going to be able to get assistance from those individuals. And then, of course, when you're talking about franchise tax board, you've got the California Volunteer Reference Manual. Think of the reference manual as the California version of the IRS Form 4012. And that particular reference manual is over 40 pages. It has a lot of good information pertaining to California returns. And then the knowledge check, this is something that your coordinator may or may not use. This is a very short, I guess you'd call it quiz or examination to kind of test your knowledge of FTB. And that's something that site coordinators sometimes do or do not use. Other publications that you're going to get familiar with, you may not look at them each and every session, but you may refer to them from time to time. And probably the big one would be Franchise Tax Board publication 1001. And that is the document known as the Supplemental Guidelines to California Adjustments. And this is the discussion we had a few weeks ago. You've got your California tax law and you've got your federal tax law. And sometimes you're going to have changes on that California return. And one of the examples that I gave earlier was on your federal return, your unemployment compensation is a fully taxable event. California does not tax unemployment compensation. Your software is going to take care of that particular topic automatically. Certain topics will not be taken care of automatically by the software, and you've got to be able to get into the California return and make those changes. I guess one example I gave was a lottery winning, taxable by the federal government, and on your state return, you're going to have to make a change indicating that the individual won a lottery, whether it's $5,000 or $10,000, something like that, and that's not taxed by the state of California. And then every once in a while, you're going to have to jump into the publication 1005. Not that often, but every once in a while, and that deals with pensions and annuities. And you do see a lot of pensions at the VITA site. You'll probably not spend any time with residency, but you may get a question regarding residency. And keep in mind, we do not advocate for the taxpayer, but we will provide information. And this is part of that information where someone says, well, I think when I move next month, I think after a while I'll no longer be a California resident. And that's when you refer them to publication 1031, and they can read to their heart's content about California residency. And then we did mention this, and you will see this most likely with your clients. Your clients may ask questions, and they may say, I didn't get a refund maybe from last year, or maybe they'll come back to the VITA site and say, I didn't get a refund for this year. And that does happen. And when the Franchise Tax Board mails out documents requesting taxpayers take action, and then of course what happens is the taxpayers need to take action in order for them to get their state refund. But again, and I'll mention this again and again and again, you want to be really careful. Do not advocate for clients, VITA clients. You want to provide them information. You want to point to the screen and say, this is where you need to go. And again, no advocacy because that's something that you don't do. Advocates are going to be individuals like employees at the low income tax clinic, might even be someone at United Way, or maybe a paid tax person if an individual has to go to a paid professional. And then sometimes you're going to have issues regarding healthcare coverage. We know from our previous sessions everybody who's getting their tax return completed, and this would be for a California return, they have to have some type of health coverage. And there are many different ways to get health coverage. One way you can get it through Medi-Cal. If you're low income, you apply and you qualify. Another way would, let's say you're a senior and you're on Medicaid. Those are a couple, Medicare, I should say, Medicare. So those are a couple ways to get health insurance. Another one is you're going to have working individuals and they're going to come in and they've got coverage through their employer. But again, those are some examples of healthcare coverage. There are many types, many ways to get healthcare coverage. And then, of course, if you meet an exemption, that means you don't have coverage, but you get the exemption, and that means you're not subject to the individual share responsibility penalty. And this has been my experience, and you may have, if you're a returning volunteer, you may have different experience. My experience is the vast majority of VITA clients that come to the site either have healthcare coverage or they meet one of the exemptions. Typically, it's they can't afford health insurance, and that means the vast majority of VITA clients are not paying that individual share responsibility penalty on their California return. All right, Sean, I'm gonna see if there are any questions or comments regarding our selected list of references.
I do not see any comments in the chat. If anybody has a comment or a question,
Okay.
go ahead, put it in there.
All right, very good. And again, just a reminder, your go-to document, the 4012, chances are in that 4012 franchise, excuse me, IRS document or your California Volunteer Reference Manual, chances are you're going to find most of the answers that you need. Okay, and then just a reminder, if you haven't certified on Lincoln Learn, you have plenty of time. And Sean, I don't know if you're the answer man for this, but we talked before. What is the due date for our volunteers to submit their certification so they can be volunteers at the church?
We want them certified by January 25th.
Did you say January 27th?
It's January 25.
25,
Yeah.
25. Okay.
Yeah.
And do keep in mind when you are certifying, this certification link is different from last year. It looks a little bit better. I guess it has additional bells and whistles, but the bottom line is the certification is open book. It is self-paced. So if you decide you want to come back the next hour, the next day, you can do that. Your answers will be saved. And then, as we've mentioned before, probably the best way to do it is sit down with that IRS form. It's called a 6744, and it has all of the test questions. Now, the test questions on the 6744 may be a little bit different format that you'll see electronically, but the bottom line is you will serve yourself well if you take that IRS form 6744, look up the answers to the various questions, populate the 6744, and then when you're done, then you can sit down, open up Lincoln Learn certification, and then you go ahead and plug in the answers, and then you'll be able to pass the test. And all you need to do is get an 80% on the various certifications. Do keep in mind for the church, your certification, if you certify at the basic level, then you're ready to go. I would highly recommend, if you can, if you've got the time and you want to spend the effort, certify on the advanced certification. That'll open up your world a little bit. You'll be able to prepare just about any type of return that the church throws at you. But again, Lincoln Learn certification is open, and you do have to certify each and every year. So if you certified in 2023 for tax year 2023, fantastic. For the new year, you have to certify in 2024. And if you have not certified, usually once you go through the training, you have the reference materials with you. Usually certification is not a bridge too far. Usually you can knock out the basic certification in a couple of hours, and then the advanced certification probably in a couple hours too. And again, you can look up any answer that you need, and your lookups are typically going to be in the IRS publication 4012. The practice lab, I checked last night. Again, tax year 2024 for the states. State of California has not yet been published, but your 2024 tax year is available in the practice lab. And of course, you do have to register to not only certify in Lincoln Learn, you also have to register to utilize the practice lab. And the the IRS contractor is going to collect data. And as we've mentioned, you're not going to get contacted to purchase anything. You may be contacted for a survey, and that's about it. We talked about the tutorials, we talked about the practice returns and solutions. And so there's just a lot of material. It depends on how much time you want to take. I think probably the vast majority of us, we want to certify and we want to be ready to go. And again, the certification, just a few hours, if that. If you find yourself spending a lot of time on the certification, that's when you want to slow down, go back to that publication 4012 and start reviewing that. Okay, I want to talk about tax professionals, not to advertise tax professionals, but what we do is we do have VITA clients who we cannot assist for various reasons. And that would be an out of scope return. And again, there are many reasons why an individual cannot be assisted at a VITA site. And so we're going to talk a little bit about practitioners. What we do not do in the VITA program, we don't say, go see Maria, go see Rebecca, go see John. We don't do that. We simply recommend if you need a tax professional, they're out there out in town, there's ways to contact them. Typically, you're going to contact a tax professional via some type of society. So, for example, certified public accountants, in order to be a CPA in California, you have to do a number of things. And of course, the big thing you have to do is you have to have the educational requirements to sit for the CPA examination. And then once you pass the CPA examination, then you're a CPA. And of course, you'll be working for most likely another CPA until you get your hours and go out on your own. And then CPAs do specialize in tax. They also specialize in other areas. So you may find a CPA who knows little to nothing about tax because that's not their bailiwick. But again, the individuals who are in the tax world, they'll advertise their services, and you can go to various societies. For example, the California Society of Certified Public Accountants, that would be one example where you would reach an accountant. And again, going online to find that tax professional. And of course, it also begs the question, some people say, how much do tax professionals charge? And the answer is, it depends. Sometimes it's a reasonable amount. may be reasonable for me, may not be reasonable for you or your client. But the bottom line is these individuals are tax professionals and they'll help people out if need be. And yes, they do charge. From time to time, you might find a tax professional that will conduct pro bono work. And that's something you got to ask up front. You tell the individual that I have limited means. And in some cases, that tax professional may offer pro bono assistance. Another type of tax professional is an enrolled agent. There's two ways to become an enrolled agent. One way is to take a series, study for and take a series of examinations. And then, of course, you'll sit for the enrolled agent examinations, you'll pass them, and then you're deemed to be an enrolled agent. Another way to do it is you work for the IRS for 5 years in a professional or paraprofessional capacity. You separate from the IRS, you request your enrolled agent designation, you get it, and then you are now a enrolled agent. And similar to the CPA and enrolled agents, they have continuing education requirements. And obviously, that's something that has to be done because you have to stay current. It doesn't matter whether you are a plumber or if you are an electrician or a licensed attorney. Every field, every occupation has to have some type of updating. And same thing with tax professionals; they have continuing education. And then a very common type of tax professional is what is called a CTEC registered tax preparer. That acronym CTEC is the California Tax Education Council, and that is an organization that was established by the state legislature, about 20, 25 years ago. And what they do is if you are a tax professional in California and you are not a CPA, and you are not an enrolled agent and you are not an attorney, then you got to belong to CTEC. That's a state law. And what that means is you have to do certain things to become a CTEC registered tax preparer. You have to take qualifying education. You have to provide CTEC with your fingerprints. You have to purchase a surety bond. And then, of course, you have to register. Once you do all of that, then you're deemed to be a registered tax preparer. And then, similar to the CPA and enrolled agent, you have to take what is called continuing education. And so when people ask me at the VITA site, Jerry, where can I go because my return is out of scope? Say, well, you've got some options here. And the options would be maybe a CPA, maybe an enrolled agent, and maybe a CTEC registered tax preparer. You can go online and you can type in your zip code and one of these professionals will pop up. So for example, for CTEC, you can go to the CTEC website. You can type in your zip code and you'll get a laundry list of CTEC registered tax preparers in your zip code, and then you can pick and choose who you want. But again, as a VITA volunteer, we do not recommend a specific preparer. We don't do that. And we also do not, as I mentioned, we don't troll for business. So, for example, I am I'm an enrolled agent, and when I work at my VITA site, which is Coastline College, and someone says, "Hey, I need help tax prepare because my return's out of scope," I don't say, "Well, no problem. Here's my business card. Call me." No, that's not allowed. So you don't troll for business as a tax preparer. If you're a licensed insurance person, you don't troll for business. You just don't do it. What I do is I sit people down in front of a computer and I say, here, you can Google this agency, you can Google this society, and you can again select someone who you want. It's your choice. We're not gonna point you to a particular person. Just you don't want to do that. If you got a business card, you probably want to keep it at home, but you don't want to give it to a individual again trying to drum up business for whatever business you're in. You just don't want to do that. And then I will mention this. I do know that some of our volunteers decide that they fall in love with tax, and I guess that's possible. And they decide they want to become some type of tax professional. Probably the quickest way to become a tax professional in California is to become a CTEC registered tax preparer. It is, I'll use the term a low bar. It doesn't mean you don't know anything, but it's a low bar. You don't take months and months and months to become a CTEC registered tax preparer. You could literally do it in probably a week or less. But of course, then the issue is obtaining the depth and breadth of knowledge to become a tax preparer. That's going to take some time. It's not going to be weeks. It's not going to be months. It's probably going to be many, many months or maybe even a year or two. So again, that's probably the quickest way to become a tax preparer. We did have a guy, in fact, I've seen this a couple times at the VITA site. Individuals want to become a professional and they become enrolled agents. So what that means is they study, they get a hold of a company, and there's a couple of them that sell enrolled agent material, and they study for the series of examinations they have to take. They take the exams, and then they're deemed to be an enrolled agent. So those are a couple ways. Now, your CPA route or track, if you will, that is a little bit longer. You're going to have to get your education. Typically, what that means is you're usually going to have a baccalaureate in accounting. That's probably the general rule, if you will. Plus, that means you got to take some additional accounting classes, and then of course you have to study for the CPA examination, and that's not days or weeks; it's probably months, and then you have to sit for a series of examinations. So again, it's a longer track. It's a greater effort to become a CPA, and of course, if you want to specialize in taxation. Now, there are other types of tax professionals, but these are typically the three that you'll see. You do have licensed attorneys, but typically, it's been my experience, usually you don't bump into an attorney who's preparing Form 1040s. I mean, they can, but usually you don't see that. All right, Sean, if there's any questions about tax professionals, we can address those.
Um, so there's a couple questions. One is how do we document continuing education? You could do that, or I can answer that.
How do you document continuing education? Various ways to do it. So, for example, I belong to the California Society of Tax Consultants. And in our society, it's a statewide society, and then they have many chapters in the state. And so we can take classes through the society. Those classes can be either via Zoom or face to face. And then what happens is we register for them. There is a certification that we receive. They actually send it to us. They also send it to the IRS. And then what happens is your qualifying, excuse me, your continuing education is on file. And then what happens is, of course, if you're a tax person, you have to have continuing education so many hours. So, for example, I'm an enrolled agent and I'm required by the IRS to have so many hours of continuing education. Again, one way I get it is the society that I just mentioned, taking classes. Of course, you pay a modest fee for the classes. Another way to do it, you find a what is called an education provider, and that's they're all over the place. And then you sign up for a course, you pay a modest fee, you take the course typically on Zoom, and then again those qualifying hours then are sent to the IRS, and then you're in compliance.
And then,
Anything else?
so it's a related question, but somebody asked about how we document the VITA hours for continuing training.
Oh, your VITA hours, yes. If you are a tax professional and you want to get continuing education through participation in the VITA program, what happens is your 13615, that's your basically your VITA contract, that'll be generated in Lincoln Learn with all of your modules populated on that 13615. That document you're going to share with your site coordinator. And then what happens that eventually then that 13615 and the certification, it bubbles up to the IRS. And then what happens is you're going to earn continuing education hours. So if you're an enrolled agent, that means those hours would be sent to the IRS. If you're a CTEC person, those hours are sent to CTEC/IRS. So essentially it gets on file, if you will.
Yeah, and as a site coordinator, all you have to do is cooperate a little bit. You have to check off the right boxes so we know who to send the information to. And then every time you come in, we keep track of how many hours you work. And the site coordinators have to uh, sign for that and send it to our IRS partners at the end of the season. It doesn't get sent in until April because we don't know how many hours you
Yeah,
work
April is
until
the
it's
due
done.
date, and yeah, usually that's not an issue. But again, you want to keep your documentation, you want to keep your 13615, and of course all the various modules that you certified on. And here's another thing: if you are a tax person and you're teaching, there's a lot of teaching that goes on, especially in January. And what you're going to do, you're going to make sure those hours are documented, and you can get continuing education credit for teaching tax as a tax person to VITA personnel.
Then there's one more question with regard to making referrals. So I think this person knows you can't make an individual referral, but they're asking if you could send somebody to a company like Jackson Hewitt or H&R Block.
Yeah, I would be careful. I mean, there's a lot of different types of companies out there, and so when people ask me, "Hey, should I go to H&R Block?" I'm thinking, well, I don't have anything against H&R Block, but again, if you're going to recommend someone, I would say here are some options for you. You can go out in town. There's those large firms like H&R Block, like Jackson Hewitt, and then you can go to these society websites, like I mentioned, the California Society of Tax Consultants, and you can find your professional tax preparer. And that's probably the way to do business. But again, if you guide someone to a particular company, I don't think that's the way to do business. You want to give them options. These are some examples of professional tax preparer firms or societies.
Yeah, and at the St. Killian site, we do have a handout for people that are out of scope, and it's basically the websites for the three things that are shown on this slide for Cal CPAs, the list of enrolled agents, and CTEC. And we just point people to those organizations. And yeah, they're going to be overwhelmed with the number of names, but we're not supposed to point to any one person
Correct.
or company.
And then people will always ask you, they'll ask you how much they cost. And as I mentioned before, it depends. Like for example, I know an enrolled agent, he's also a CPA, and his minimum charge for any type of 1040, and I'm even talking the basic 1040, is $695. So obviously that doesn't excite a lot of people because 695 bucks for a real basic return, you're talking that's a lot of money. And so again, it just depends on the person, it depends on the firm, and it depends on the complexity of the return. So I wouldn't get into the discussion about money. I would just say your return is out of scope, and here are some options for you to get professional tax assistance.
And then you're also going to go over the low income tax advocate thing, right?
I think that's probably the good time to mention it now. A lot of times, and I've actually seen this dozens of times at VITA sites where individuals will have very complex issues, or they just got all sorts of issues pertaining to collections, examination, or in some cases, tax preparation, and they are of limited means, they are indigent, and they'll ask me, "Hey, what can I do?" And I said, "Well, again, you got options. We all have options. And one option is figure it out." Well, that's probably not what most people are going to do because they're going to ask you, "Hey, I need help." They don't have the specialization. And so, what they probably want to do is they probably want to take advantage of a low income tax clinic. Low income tax clinics are all over the United States. They are financed in part by the federal government, i.e., you and me, the taxpayers. And low income tax clinics typically have licensed attorneys, they have CPAs, they sometimes have enrolled agents, and they will handle very complex, very difficult issues, examinations, collection, tax preparation. And sometimes they'll do it for a modest fee. And in some cases, they'll do it pro bono, i.e. free. And so when I bump into that VITA client who has all these issues and we simply can't help them, I'll do my best to educate the client. Again, will not advocate for them. And I say one option is the low income tax clinic. And the closest one that I can think of is in the city of Santa Ana. And that's probably a good reference, again, for that individual, that client who's got a bunch of issues that we can't even begin to touch. And so that's one way to do it. And occasionally, you'll bump into people who do pro bono work. Like, for example, again, I'm an enrolled agent. I do pro bono work for very low income taxpayers who choose not to use the VITA program. I'll get calls out of the blue. My name is Fred Flintstone, and I live in Anaheim, and I need help, and this is my situation. And in some cases, I'll simply well, first of all, I'll refer them to the VITA site. In some cases, they may be out of scope. And then what I may end up doing, I may end up taking them as a pro bono client, which means I will not charge them anything. But again, that's something you're going to have the discussion with that professional. But again, low income tax clinics, they're alive and well. And again, the closest one in Santa Ana. I believe they also have one in San Diego, but since we're in Orange County with their VITA clients, Santa Ana is probably going to be the game that they want to play.
Yeah, and then I'll just mention one other thing for the St. Killian volunteers. One of the things we've done in the past few years is partnered with the IRS Department of Tax Advocates to have them come to our site once the tax season. We're going to be doing that again this year, pretty late in March or early in April. We try to do it towards the end of the season so we know who might need to visit with them, but that's another service that's available to people who need help. It's a group in the IRS that advocates for the taxpayers. They're trying to help them out, and it's a free service. So
Yeah, and that's a
people
good
like
point,
that.
Sean. When you hear the term taxpayer advocate, what they do is they're working with taxpayers that have issues that cannot be resolved through normal channels, and it could be collections, it could be examination, it could be a statute situation, and the advocate usually they're very well trained individuals. Sometimes actually a lot of times they're former tax preparers, i.e professional tax preparers, or sometimes they're former tax auditors of the IRS or revenue agents. And so the advocates office, they do a real good job. And again, they're highly trained individuals. The ones that I've known over the years have been around the IRS for 20, 25, 30 years. So usually they know exactly what they're doing, and they're able to typically resolve issues. I'll give you an example. Like I have now, this is an example of a paying client. So I had a paying client contact me, and he has the IRS trying to collect the money that the IRS says he owes. He doesn't think he owes the money, so he came to me. We conducted an interview, and I said, okay, let's get a hold of the advocate service, and let's get what was called an audit reconsideration. And all that means is the IRS then says, okay, we'll give you a second look at your audit that was conducted, and let's see if everything was addressed. And in his particular case, we'll end up probably getting, for lack of a better term, the IRS off his back, and that assessment against him is most likely going to go away. Of course, it takes time, and that's another thing when you're talking about IRS employees. You have a lot of new IRS employees, and of course, it takes time to train individuals. And it's not a day, it's not a week, it could be many, many months. And so there's a lot of employees in the IRS that are going through training. And but again, when you find that right IRS employee to help you out, usually it's going to be an advocate, typically taxpayer advocate. It might be someone in taxpayer service when you go to for example, the Santa Ana office, or I think they still have an office in Laguna. I think they're shutting that one down, but Santa Ana is alive and well. You go to the office, the IRS office in Santa Ana. You have a particular issue. Maybe you want someone to work in your account, and that's another way to get that assistance. All right, Sean, anything else?
No, I think we've covered all the questions. Thank you, Jerry.
Okay, very good. Okay, and then here's another, again, just another resource. There are many different types of resources. You or the site coordinator is going to find something that works. And this is called the Interactive Tax Assistant. And this particular resource, it's publicly available. And this is important. You're going to go to the Interactive Tax Assistant. you're going to enter in data to get an answer, and that data is not going to be saved. Your name's not going to be saved. Your information is not going to be saved. It's just a way to walk a taxpayer through to determine, for example, what their filing requirement should be, something like that. Another example would be, let's say you're trying to determine your filing status. A taxpayer is trying to do that. This is one way. They can go to the interactive tax assistant. They'll answer certain questions, and then the assistant said, based on the information that you have entered, your filing status is X. So again, you can see all the various topics here, and there are other topics, but again, these are some of the topics that are in the tax assistant. And ones that we see on the VITA site all the time: filing status and dependents, retirement. This is a big one. You have a lot of people that come to the VITA site that have, and I'll be, I'll be the first to admit they're modest pensions. You're not going to have whale pensions, but modest pensions, and they might have an IRA, an individual retirement arrangement, and then a lot of Social Security to include perhaps maybe even repayments on Social Security. So again, you're going to see that. Other income is a big thing. We talked about this again and again, where you're going to be at the VITA site. Someone will come in and say, hey, I'm part of a class action lawsuit and I won, $50 or $300, something like that. Is this a taxable event? And that interactive tax assistance would be able to help you out for other income. We also talked about the IRS publication 525, and the 525 is another treasure trove when you're talking about looking up other income. And then, of course, deductions and credits. And you're always going to get those questions. I get those questions all the time. Jerry, is this particular item deductible in my business? For example, one of the questions I get all the time, Jerry, can I deduct my cellular telephone for my self-employment, my small business that I have? And the answer is it depends. And so you're going to ask a few questions, but that tax assistant does a really good job. And I would recommend it. If you haven't gone on it before, you want to jump on it maybe before the season starts to familiarize yourself. But again, just another resource for your taxpayers and also a resource for you. Okay, we're going to talk again about the PIN, the what is called the IRS IPPIN, and that's that individual, or I should say, identity protection personal identification number. And what that means is if someone has your tax account compromised, and that happens all the time, what they can do, there's a number of things they can do. They can get this IPPIN, they can request it, and with the IPPIN, they can simply e-file their return, even though their account may have been compromised. But again, they have to have this IPPIN. So a lot of times, taxpayers will come to the VITA site with a letter from the IRS saying, "Dear taxpayer, here's your IPPIN." And so that means we'll enter that data into the software and we'll be able to electronically file for the person. And this has become actually it was very popular a couple of years ago, but you'll still see those individuals walk in with that IPPIN letter. Okay, and again, the part of your resources, a lot of people, big question, they'll ask you, hey, where's my refund? Now, every site is different. And so what happens is, and I'll give you my example at the site that I run. People will call up, FIDA clients will call up and say, Jerry, I didn't get my refund. And I say, well, okay, so let's see if we're open, then we can go ahead and assist you. Now, of course, when we're closed, we're not going to assist the individual, but if they call us up when we're open, we'll say, okay, we'll look at the return. Oh, yes, you were due a refund of $800. And if you didn't get it, then there's a couple things you can do. You can go on the IRS website and you can check the status of your refund. And there are many reasons why individuals did not get their refund. It could be a mistake on the part of the VITA site. The VITA sites do make mistakes from time to time. Or it could be a situation where the taxpayer owes the federal government money And what happens is before the federal government, i.e. the IRS, sends off a refund, IRS is going to check the account, and they utilize what is called the Refund Offset Program, ROP. And so let's say, for example, you've got a VITA client who files a return and they didn't get their return, and they say, hey, what happened? And we're still operational. And we look it up, say, yeah, you should have got that refund of $800. Then the next step is contact the IRS. Because let's say perhaps maybe they owed on their student loan and they're in default. And that's money that they owe the federal government. Then, of course, one option is the IRS can withhold the refund and apply their refund to their federal tax debt. And that does happen. So again, what I do when people ask me about refunds, I say, if this is available, you should use the data that you have, go into the IRS website to determine the status of your refund. And again, this happens a lot. I get calls. In fact, I think I got a call about 2 months ago, and it was regarding a refund. And so I told the taxpayer the site's closed, and when we open back up, you can come on in, and we will again not advocate for you, but we'll show you where to go on a return. Excuse me, on an IRS website to determine the status of your refund. But you got to have data, and that data includes obviously your filing status and the exact amount of the refund that you were due. And this is another time, and of course, I think I've made this mistake a few times. Sometimes clients will get confused about the particular year. And so you want to make sure you focus on the tax year in question. It could be the last one, tax year 2023, but make sure you develop the question, because sometimes people come in and they really don't even know what the question is. So sometimes you got to help them. So again, you can point the way. And probably for the vast majority of VITA clients, when you're talking about federal side of the house, that IRS website is going to be the place where they need to go to get their answers. And so again, that's what we do at our VITA site. We'll open up a computer, we'll show them the website. Again, we're providing instruction, if you will, and we're pointing things out. That's not advocating for them. We're just showing them this is where you need to go, and then you let your fingers do the walking, so to speak. And again, there are many reasons why refunds are not sent out. And I recognize, I'll be the first to admit, very frustrating when someone doesn't get their refund. Highly frustrating, especially if it's thousands and thousands of dollars. But again, if you don't get your refund, you need to take that action. Go on the refund. Where's my refund? And enter the data to determine the status. And at the end of the day, sometimes you got to call the IRS. And I've called the IRS as a customer, i.e., Jerry, the customer, i.e., taxpayer. I call on my behalf. I call on the behalf of clients. And usually, what happens, and sometimes it's may not be super organized, it may not be super quick, but you're typically going to have someone say, "Okay, this is the status of your account." Once they verify who you are. So you do have to be patient. And I think I mentioned before, if a refund goes into the incorrect account, very frustrating. But again, that's something we do not advocate. If it goes in the wrong account, that simply means that typically the taxpayer has provided us with the incorrect bank account information. And so that's something that the taxpayer is going to have to work at. We don't advocate, we don't do that. I think a couple times the VITA site has made a mistake. And usually what happens if someone says, I want money to go into this particular account, and let's say the account is closed, then what happens is the IRS then will default to a paper check for the taxpayer, and they'll send out that paper check. And if you've never received a paper check from the IRS, I will tell you from personal experience, it does not take days. It takes many, many, many weeks. And so if you're expecting a paper check from the IRS for your refund, you're going to have to be patient. And that's why it's so important at the VITA site to encourage your taxpayer to take a direct deposit if they're going to get a refund, because it's going to be a matter of probably less than a week or so, as opposed to many, many weeks for that paper check for the refund.
Hey, Jerry, there was a question regarding your previous slide on the individual taxpayer assistance page.
Let's see, this
Uh,
one?
Um, the ITA one earlier. That yeah. So the question is this website, does it have access to real live people, or is it all just like FAQs and computer generated answers?
No, to my knowledge, there's no chat feature when you're talking about the interactive tax assistant. What you're doing is you're entering data, and then what happens is then you hit submit, and then the tax assistants will give you an answer that based on the information that you have provided, your filing requirement is a single for tax year 2024, something like that.
Yeah. Okay, thanks.
Okay. I will tell you this, I've used this interactive tax assistant a few years ago as an IRS employee to familiarize myself with it. And in some cases, to answer questions. Sometimes it does a pretty good job. But again, just another resource. Okay, let's move on to now. This is something you probably won't see a lot of. But when you're talking about alimony, as we've mentioned before, alimony is something that is ordered by a court official. Typically, it's either a judge or a magistrate, but someone who's a court official who has the authority, and then usually alimony is going to be paid by someone to their former spouse, and in some cases, a current spouse, but usually a former spouse. And so if you're providing money to your former spouse because you're a nice person, that's all it means. You're a nice person. But if you're ordered to pay alimony by a judicial official, i.e., a judge, that's something then when you're at the VITA site, if you're talking about a divorce that occurred, let's say back in 2015 or 2016, something like that, then that alimony is going to be reported on a taxpayer's tax return. And then as the individual paying the alimony, you can take a deduction. But you're going to read in the publication 4012 for individuals who are divorced after 2018, and there's an alimony agreement in place. That means the individual receiving alimony will not report it on their tax return, and the individual paying alimony is not going to take a deduction on their tax return. Now, we're talking just federal law right now. State of California does not conform. And so if you are receiving alimony on your state return, it's going to be a fully taxable event. If you are paying alimony on your state return, you can take a deduction. And so that's that example I gave you about what is called nonconformity. You're going to see that from time to time between the federal and the state side of the house. And of course, if someone says, I've got a divorce decree, and I recognize the vast majority of people on this telephone call are not attorneys. I understand that. But if someone has a divorce decree, I'm not an attorney, but when someone has a divorce decree, I say, give it to me, I can read, and I'll read through it, and I'll say, okay, based on this information in your divorce decree, you're required to pay alimony. And if you paid alimony, then of course we know under current law, you can't deduct it. Again, that would be for divorce after 2018. But you will see this from time to time. I see this more and more at the VITA site. And it's a very sensitive topic, especially if you're paying alimony. A lot of people probably don't want to pay it. And then sometimes, as I mentioned before, you may have that verbiage family maintenance. And when there's a family maintenance term in the divorce decree, and then I simply ask the taxpayer, okay, there's family maintenance. Let's determine the money that's going to the adult, and that's called alimony. And let's determine the money that's going typically to the minor children, that would be child support. And there's a way to do that. And so again, you'll see this from time to time. And usually it's going to beg the question, when did the individual get divorced? Date and year of divorce. And because again, there's a change in the tax law on the federal side of the house, either declaring alimony or taking a deduction for alimony. Okay, and then the Franchise Tax Board, you will see this from time to time where there'll be a question, And again, your sitemap is going to be one of your go-to documents because that is a treasure trove of information pertaining to income, the deductions, credits, things like that. Where's my refund? Same concept. If someone is due a refund and they have not received their refund, they can go to the Franchise Tax Board website and they can go ahead and enter certain data to determine what is the status of their refund. And as you can see on the screen right here, you need certain information. And most people, it's not a bridge too far. They can find this information and they can enter it into the Franchise Tax Board website. Now, I will say this again, just based on my experience as a tax practitioner, my experience as a taxpayer, usually the Franchise Tax Board, they're usually quicker to respond to inquiries. And they're usually, I'm not going to say they're better than the IRS, but I think they're quicker to respond. So I'll put it that way. And so usually you don't have an issue when you contact the Franchise Tax Board as a taxpayer to determine the status of your refund. And then as you can see at the very bottom of the screen here, and this is highly frustrating when people file a tax return. Like I had a client, I asked him, client, you have a refund coming to you. Do you want direct deposit? He says, no, I don't, Jerry. I said, well, then that means you're going to get a paper check. He goes, sign me up. That's exactly what I did. And the saga now is, I think, 7 to 8 months old. And he's contacted me a couple times. This is a significant refund. He goes, Jerry, where's my refund? I said, you haven't received it yet. And that's because there's probably 5 million people in front of you. And so that's the message to your clients, your VITA clients. Please sign up for direct deposit so you don't have to wait for many, many, many months to get your paper check. And when you sign up for direct deposit, you're typically going to get it in about 5 to 7 business days. And that's the message I carry to my VITA clients, and that's the message I carry to my paying clients. Do direct deposit, save yourself time and trouble. Okay, let's see. Sean, we're about ready for a break, but any questions about FTB at this point?
There are no new questions.
Okay, I think that might even take us. Yeah, okay, so what we'll do is we'll set it up and then we'll come back and we'll start doing some tax prep. And so this particular fact pattern, this is for Lisa and Robert. And this is tax year 2023 because we want to share with you the state tax return. Again, 2024 state tax return has not been loaded in Lincoln Learn. And just real quick, our taxpayers here, among other things, they are Social Security recipients. They also rent their residence. And they also have federal tax withholding on their Social Security check. And you may see that from time to time. They also have some interest income, and then the taxpayer wife, she has a small business, a side hustle, if you will, and we've got data pertaining to her income. And then you will see that she has, and we'll talk about this when we come back, she has supplies expense. And also in the fact pattern, I mentioned that she has purchased a Coach purse, and we'll talk about that, the tax treatment on that Coach purse. And then they didn't make any federal or state estimated tax payments. That's usually going to be an issue that you're going to see with taxpayers. They also sold some stock, and then we have other income on this fact pattern. They being Lisa, she won a small amount on a class action lawsuit. Very typical in the VITA site. People will come in with some type of document and they'll say, I won $20 or $50, or there was a settlement of some kind. So we'll talk about that. And then we do have bank account information, so we'll show you how to enter that into the software to make sure that you set them up for direct deposit or direct debit if they owe money, if they choose to have money taken directly out of their account. Okay, so I'm gonna leave that up and then Sean, let's take a 10-minute break and come back.
Okay, Jerry. We'll see everyone in 10 minutes. All right, Jerry, we're
Okay. All
ready.
right. I couldn't get on to Lincoln Learn. I had some issues. So what I did is I went to my professional software. It looks very, very similar to Lincoln Learn. It's Tax Slayer Pro. That's the platform. So we're going to go ahead and utilize this and it'll work for our purposes. Okay, so we've got the Lisa and Robert Walters tax return. And we'll just walk through some of these things. And Sean, if you do get questions from participants, go ahead and stop me, shout them out, and we'll do
Okay,
our best to address them.
we actually have a question real quick. It's unrelated to what you're about to do, so let's get it out of the way.
Okay.
It has to do with the alert from the IRS that we just got this week that I sent out to everybody. One of the updates was to the quality standard and QSR number 6, quality site requirement. It changed the rules around having to make the VITA site keep a copy of a permission statement from a client if they were filing for an extension. So it's just related to filing for an automatic extension request. It's not related to the electronic filing where we still need to keep the signature for that, but we no longer need this client to give us a permission to do an electronic filing just to submit an extension request. And the reason is they could have just gone online and done it themselves anyways.
Okay. And I'm trying to remember, and maybe Robert can opine on this. I don't recall last year, did you, at the VITA site, did you file extensions for the VITA clients?
We did 8 of them.
Okay. All right.
That's how
Okay.
we made our numbers.
All right, very good. Okay, so again, we're gonna get through this. This is the Lisa and Robert Walters. It'll take a little bit of time because these are all fresh entries. Again, I could not access my previously entered link and learn information. So here we go. So our clients, our VITA clients are married filing joint, and that's typically going to be one of the easier ones as far as filing status. Single, of course, would be their marital status at the end of the year. Your more challenging filing status will be head of household. My recommendation is to use that decision tree in the publication 4012. So here we go. We got that. We've got Lisa, and her last name is Walters. And then we've I threw in a SSN, her date of birth. Our taxpayer was born in 1955, so this would be a individual, typically recipient for Social Security. Although not all not all of your season or senior citizens are going to be on Social Security, but the vast majority of them will be. Okay, so we had a date of birth. And we'll put down she's self-employed and she has a business, side hustle, if you will. Okay, and then this laundry list of items, we've seen this before. Typically, the only one you're going to engage is where the taxer says, yes, I want $3 to go to that election campaign fund. And that's an order by the taxpayer to the federal government to separate or segregate monies for individuals who qualify to draw from the fund. Okay, and then we got the husband, and he is Robert. And we'll throw in a social for him. And his date of birth is November 23rd. And he is retired. And then down here in the fact pattern, it says that Robert is blind according to the tax definition. And in the fact pattern, it says he was issued a medical report from his eye doctor saying that he can't see better than 2200 in his better eye with glasses or contact lens. And so for the tax definition, he's considered blind. So we indicate that. And what that does, then the software is going to calculate a larger standard deduction. And so that's what that's all about. But again, that tax definition, you'll find that in the publication 17, tax definition of blind. Okay, and then we'll throw in an address. And they live in the city of Mission Viejo. And then our phone numbers, you might remember this from our previous discussion. Usually this is not an issue. Both, in this case, the husband and wife, most likely they'll both have some type of phone number. It's important to capture that phone number because what happens is when we perfect the tax return, sometimes we're going to have to reach out to the taxpayer, and that could be either through email or through telephone. And so you want to capture that information from the taxpayer. And again, you'll notice in the upper left-hand corner, this is the software year that we're attending to. This is tax year 2023. If you want to change your tax year, you would go into software and you would indicate the year. And that's important because I think I've mentioned this before. I've only made this mistake maybe 1,000 times before where I'm preparing a return. I realize, whoops, I'm in the wrong year. And so that's the first thing you want to do. Most of the returns that you're going to prepare at the site at St. Killian will be tax year 2023. I stand corrected, 2024. 2024, sometimes an individual will have a prior year, and that's usually something we will work with. Okay, so we answer these questions. It talks about a name change. I've seen this one time in the VITA sites, and in the 30 some odd years I've been working in VITA, I've seen it one time. So typically the answer is no. Our clients here do rent, and so we're going to indicate they're eligible for the renter's credit. Use tax, we mentioned this before. Typically, the answer is going to be 0 for the vast majority of your VITA clients. And you're going to say, no, you didn't pay any use tax to the state of California. This full year minimum essential health coverage, we mentioned this. Most individuals are going to have some type of health coverage, whether they are on Medi-Cal, which is for low income individuals, or Medicare, or maybe they've got some type of health insurance through their job. And then usually their house address and their address on their tax return is going to be the same. This is also another important thing for taxpayers. They may get into a discussion with you regarding their address. And this is the question. The question is, I'm going to move. Okay, great. People move all the time. But if you're going to move, there's certain people, certain governmental agencies you want them to know about your new address. So if I'm going to move, I'd probably tell my wife, I'd probably tell my son, I'd tell my employer, and I would tell probably the IRS and the Franchise Tax Board. And there's different ways you can do it, but if you are moving, some people wait until they file a return. Others will go ahead and utilize the form, and they will send that form to the IRS and say, IRS, I've moved, here's my new address. And that's important because if you've ever talked to someone who's had issues with the IRS, a lot of times they've moved and they haven't told the IRS their new address. So it's a good habit to do that. Okay, and we've got a client here, I should say a VITA client who is based in Orange County, California. We have no dependents here. Sometimes you will have an older couple and they may be caring for a grandchild. You do see that from time to time. Something happened to the parents, but in this case, we have no no dependents. This is a slide, if you will, a page you're going to become very, very familiar with because we have individuals that are going to have some type of wage or some type of retirement. And so let's get into our taxpayers here. We've got a Social Security. So SSA is Social Security Administration. And we're going to enter that data for Social Security. And we're going to start off with, in this case, this is Lisa's box 5 amount, and that would be $16,000. And then tax withheld, you won't see this a lot, but you will see it from time to time. And when there's tax withheld, we'll enter that. And Medicare premiums, not everybody who's 65 and older is in Medicare. I know a couple people, they have no interest in it. And to my knowledge, there's no statutory requirement to sign up for Medicare. It's probably a good idea if you're a senior and you're eligible because the premiums are right, if you will, as far as the price. So in this case, she's on Medicare and she pays $2,200 in her premiums. And that amount, that $2,200 will then be carried forward to the Schedule A as an alpha because that is an out-of-pocket medical insurance premium expense. Okay, the Social Security benefits for the spouse, this would be Robert, and he has received $30,000 in benefits. He also has tax withheld to the tune of $1,000. And he also is in Medicare and he paid premiums of $22.50. And then I'll just mention this. You may see from time to time, I've seen this at a couple of VITA sites where you've got lump sum payments. And so what that means is someone says, I'm eligible for Social Security. And they apply to the Social Security Administration and they do not receive their benefits for a particular reason. And so they may end up getting their benefits paid to them 2 or 3 years in the future, and that would be a lump sum payment. If that's the case, there's a discussion in your publication 4012 that talks about that, and this worksheet would also address that if you get that. I've seen that a few times at the VITA site. And my understanding is AERP volunteers see that from time to time. Okay, so we've addressed the Social Security, and we're going to go ahead and go to our next topic, and that would be interest income. And interest income is here. This is usually something that's not very difficult. Most people are going to come to you with a 1099 INT, and that 1099 INT is going to be interest received from a bank by the taxpayer. So we're going to go ahead and enter that. And the payer's name, let's see, this happens to be Bank of, if I can spell this correctly. And there's going to be some type of EIN, employer identification number, that will be on the 1099 INT. Sometimes your 1099 INTs will be embedded in a bank statement. But either way, we're going to enter that. And then if someone does not have a 1099 INT, but they received some type of interest income, that's going to be reported on the return, whether it's $1 of interest or $100 of interest. Okay, we'll throw in an address there. And then we're going to put in the interest income. In this case, the interest income for the taxpayers is $800. You won't see this very often, but when you do, you have to make sure you make an entry. An early withdrawal penalty, I'll give you an example, and I'll use me as an example. So many years ago, I was going to Vegas with my wife, and I'm thinking, I need some Vegas money. And I stopped off on my bank. I'm not saying this is the smartest thing to do, but I did it. And I said, hey, I need to cash out a certificate of deposit so I have some money for Vegas. And the bank manager said, okay, well, we can give you that money right away. But there is an early withdrawal penalty because you signed a contract for your certificate of deposit. And I said, okay, I understand that. And so they penalized me. And when I received that penalty, it was a financial penalty, it was reflected on my 1099 INT as an early withdrawal penalty. And you may see that once in a while. Another thing you also may see is sometimes tax is withheld from an individual that's received interest income from their bank. And that's something that you may see. And then another thing you may see on a 1099 INT is foreign tax withheld. And you'll key it as you see it from the 1099 INT. Okay, that takes care of that. And we're going to hit continue. And then this is our dashboard if you had another 1099 INT, or maybe you had a 1099 DIV. And sometimes this information is embedded in a brokerage statement, which would be a 1099B as in Bravo. Okay, so that's all we have. We're going to go to the Schedule C as in Charlie. And this may be a review for our new or newer volunteers. Schedule C. This would be for the taxpayer, Lisa. Now, typically what you're going to see at the VITA site, individuals will not have a doing business as, and so the name and address will leave all of that blank. When you first start, a lot of times you got volunteers who will spend an inordinate amount of time trying to figure out a business code. And so usually I use the term good enough for government work, get as close as you can. Now, in the fact pattern, we've already got a business code, and so we're not going to check that voluminous laundry list of business codes. But if you need to check business codes, you click on that blue in color line, and it'll give you a laundry list, many different types of industries and business codes. Okay, so we do that, and we come up with education. She's a tutor. Lisa is a tutor. She tutors from her home. Okay, we got the basic information. We're going to go to questions. And this is something you're not going to spend a lot of time on. We talked about the cash accrual method, and that's the only method we use in the VITA program. And we're going to report our income when we receive it. So we leave that alone. We don't deal with inventory in VITA, and so that's going to be left alone. Everybody materially participates in the VITA program. And so what that means is they're engaged in their business in a regular and ongoing fashion. So we leave that alone. And then everybody has their investment at risk. So all of those pre-populated sections you leave alone. All right, and then we're going to go to income. And this is important, especially if you're newer. A lot of times individuals will not have a precise number for you. And that's happened many times. And so I asked the individual, okay, well, do you know approximately what you received? And usually people have a pretty good idea whether they receive $16,000 or $26,000 of gross receipts. And sometimes their gross receipts will be evidenced by a 1099, maybe a 1099 NEC or a 1099 MISC. And one thing that's important when someone is reporting their gross receipts, the taxpayer, they've got to have some type of method to document or account for their income. And again, usually most people know what they're generating. And again, we're cash method, and so what they actually receive. In this case, our taxpayer, she received $14,000. And that's usually all you're going to do in this particular section. You're not going to enter data in those other blocks. Okay, so we've got the income. And then Sean, I've got a question for the participants. Can someone let you know whether or not the mini coach purse is something we can deduct on the tax return? You still there, Sean?
Yeah, Sierra, I'm here. How about Bess Farrell? You're the first one on the list. What do you think,
Okay.
Bessie?
I don't have the paper in front of me, but a coach purse, no, I don't think she can deduct that.
You are correct. And for those individuals who are not familiar with Coach Purse, I'm not an expert at a Coach Purse, but I understand they're purses, and they're usually maybe not expensive, but they're more than a regular purse. And it's something that you buy, and that would be a personal item. And there's a lot of personal items that you buy in your life. And so typically those personal items are not deducted on your Schedule C. So she's a tutor, and buying a purse would be what is called a personal and family living expense, not deducted on a tax return. And so you're going to get this all the time. People say, I bought all this stuff. And you look at it and you say, how does that pertain to your business? And so you want to remember when someone buys something, it has to be ordinary and necessary for their line of work. It has to be reasonable in amount, and there has to be a business purpose. And so a coach purse in this particular fact pattern would not be part of her business expenses. It would be a personal expense. Okay. Supplies for our client, our VITA client, she spent $500 in supplies. And so we're going to go ahead and enter that. And then this is something that you're going to see a lot of, and I'll just open this up real quick. You're going to have individuals that are engaged in some self-employment making $10,000 or $20,000, and they may have vehicle expense. If they have vehicle expense in VITA, we only attend to the standard mileage amount, if you will. And so that car and truck expense, you're going to open that up. This might look familiar to you. You're going to enter data regarding the type of vehicle, when it was placed into service, and then you're going to answer these questions, business miles, and they're usually going to have some type of method to account for the miles they drove for business. Commuting is going from your house to your place of work, and then from your place of work to your house, that's commuting. And then other would be going to the laundromat, visiting friends and family, going to church, going on vacations. And most people will have this information. You may have to, for lack of a better term, you may have to reconstruct, which means you got to ask them a few questions. But after a while, people will be able to figure it out and give you that data. And sometimes they'll come in with a piece of paper with all that information written down. And then down here where it says check, usually you're going to be checking all four of these, but you'll run through that when someone has, again, a vehicle they're using in their business. Now, one thing we don't do in the VITA program, we don't do the actual expense method. That's the gas, the oil, the tires, the maintenance on the vehicle, the insurance, and all of that. Just the standard miles.
Jerry, got a quick question from the chat.
Sure.
Regarding that bag, if somebody purchased a bag that was labeled as a messenger bag for that business, would that be okay?
Well, I know what a messenger is. I know what a bag is. I don't think I've ever heard of a messenger bag, but if someone utilizes some type of purse or satchel or bag and they're using it for documents, then you can certainly make an argument that's a business expense. Now, of course, a coach purse. I think that's probably, again, that leans through what is called personal and family living expense. I'm not a female. I've never owned a purse. I probably won't own a purse. Most of the females I know, they own a purse, and that's deemed to be a personal and family living expense. So I think the answer to that is probably no, because again, it's personal.
Right. And I think it comes back to is it reasonable and ordinary for that business, right?
Um, yeah. And like I say, fact pattern, you're probably not going to get this at the VITA site, but sometimes you're going to get situations where you're sitting there and you're trying to determine, is this a business expense? And what I always tell people is give me a list of your business expense, give me a title of that particular item, the dollar amount. And if something just looks unusual, we're not auditors in the VITA program, but we may ask questions because the last thing we want to do is put something on a return, and then maybe the individual is going to get examined, and then perhaps maybe the IRS may end up disallowing it. But usually taxpayers are pretty good when they come to the VITA site. They're usually really good about providing information pertaining to their business expenses. But again, just remember those four things: ordinary, necessary, reasonable in amount, and is there a business purpose? And usually you're going to be able to find that. And probably the issues you'll bump into, the two that I've seen over the years, is someone has a cellular telephone and they only have one cellular telephone and they're claiming that as their business expense. And I always tell people, well, if you get a cell phone, the tax courts have been real specific there. If you have just one and you have a monthly fee you're not going to be able to deduct it on your tax return. If you're able to itemize those business calls, okay, then you got a point. You can argue that. And then the other topic is vehicle expense. Sometimes people say I drove 100,000 miles. Well, when you start doing time distance factors and other activities in their life, say, well, when do you find time to sleep and do other things if you're driving 100,000 miles? So that's where you have to say, I need a business log, and let's make sure we attend only to your business miles that you're driving for your business.
And then there's another question, Jerry. So on the auto miles, the form says that the business miles are required, and it has an asterisk. Do we need to enter the other stuff for like personal use and commuting?
Oh yeah, let's go back to that. So what you would do is, and I'll use a typical VITA client. VITA client comes in, they've got some line of work, and we say, okay, tell us about your business miles. And so we plug that in. Commuting, if they have commuting expenses, and some people do not have a W-2 job, they don't commute from their house to their work. And so that may be zero. I would make an argument just about everybody you bump into who's a driver is going to have other miles. They go to the grocery store, they go visit their mom, they go visit their friends, they take a vacation, they go to church. And so you're typically going to populate business miles and other. And then, of course, if someone has a W-2 job, then you populate all three.
But we don't have to. It's just you have to enter business miles because that's how it's going to calculate the
Correct,
credit.
correct. And one thing that's really good about the software, it's like people. Software is not perfect, but it does a pretty good job. And so if you do not enter data that you're supposed to enter, then the software will remind you, and you got to go back there. But yes, it's just looking for business miles. Okay, so we're done with our Schedule C. We've entered the income information. We've entered the information pertaining to the expenses. And now we're going to go to our dashboard. We can see the dashboard, which shows net income. And then your software obviously is going to calculate self-employment tax based on that net income amount. And whether you are 70 or 95 years old, if you are self-employed, then you're going to be paying self-employment tax. And some people argue about that. I don't argue with them. I say that's the law. And in fact, I've got a client who's 91 years old and she pays self-employment tax. And yes, she's drawing Social Security. Okay, so we have that. And then now we're going to go to our, and again, this is a refresher, if you will. We're going to go to the Schedule D. This is for your capital assets that have been disposed of, which means individuals sold, typically stock. That's usually what you're going to see in the VITA program. So we're going to open that up. In this particular case, we've got the taxpayer and she's got some shares in a corporation. Usually you're going to find this information on the 1099-B as in Bravo, date acquired. Let's see, in her particular case, she purchased this back in 2013. I stand corrected, 2020. And then she sold it in June of 2023 for our purposes, the current year. This information usually is going to be found on the 1099-B. We got a sales price. In this case, she sold it for $4,000. And this is where you're going to see that drop-down menu. And the answer typically is going to be, it's reported to the IRS, typically. And then her cost for this particular taxpayer, she spent $6,000 for her shares. And you can see right now, this is a long-term thing for her. And she has a loss on this particular transaction. And of course, you may see this from time to time. Taxpayers are limited to their losses, and you'll see she'll be able to take this loss. Okay, so we've entered data pertaining to the Social Security, pertaining to her self-employment, the 1099 INT from the bank, information pertaining to the sale of stock. And now we've got that one item about the class action lawsuit. And she received $475 from this particular settlement for compensation for lost wages. And so we jumped into the publication 525 and we determined we've got other income. So we go to the other income section. In this case, it's the taxpayer. Here's the laundry list. And we're going to enter other income. And in this case, it's via a lawsuit. And the amount was $475. And as I mentioned before, a lot of times you're going to see this, and it simply means you're going to review the document. Sometimes they'll have a postcard from the law firm. Sometimes they'll have a copy of the court order. And your publication 525 is most likely going to be the document you're going to look at to determine if it's taxable or not.
Am I the only one that lost Jerry's audio?
I lost it
Can't
too.
hear
I thought
him.
it was.
I can't hear him.
Okay.
You can't hear?
Now
You
we
can't
can.
hear me?
Yeah, we can.
Yeah, you came back now. We lost you for a minute there, Jerry.
Okay, I see my internet connection is unstable. Can you hear me now?
Yeah, we can hear you.
Okay, all right. Okay, so that's that. Now, just a couple things before we move on to finishing the return. Let's go back to the income section. I wanted to point this out because you will see this from time to time. Individuals will come in with a 1099-G from the state of California, and this is a tax refund, and they'll say, hey, do I need to pay tax on this? And the answer is, well, it depends. So this is the information that you need. You're going to go to the state and local refund worksheet, and the information that you're going to need is the amount of the refund, where it says state and local refund, right here, and then your prior year taxes. And so, for example, this is a 2023 tax return that we're entering data for. And so that means to determine the taxable amount of that state refund, we'll need prior year taxes, and that would be the 2022 return, specifically the Schedule A as an alpha. And what we would do, we would populate all this information that the software is asking, and then what would happen is the software then would determine the amount of the refund, if any, that's taxable. So what that means is if someone comes into the VITA site with a document that says, I got a refund from the state of California, and in the previous year, they did not itemize on their Schedule A on their Form 1040, that means that refund is not taxable on their federal return. And of course, if they did itemize, then you want to populate this information to include the filing status. And then of course you have data down here, whether they're senior or whether they're blind, but you want to populate all of this. And all of this goes to what is called the tax benefit rule. And what that means is if you've taken a tax benefit in a previous year and then you've received a refund, well, then obviously, you're having your cake and eating it too. You can't do that. And so that's when you've got to determine if some or all of that state tax refund is reported on your federal return. Okay, so we're going to get out of there. And then I
There's a
want to
question, Jerry.
Sure.
Somebody's asking, when do we bypass the state refund worksheet?
Probably the best answer to that is don't, because unless you have this memorized, and I've never met a person to have this memorized. I don't have it memorized. I don't know how much of that refund is going to be taxable. And so what I do is I will start off with state and local refund, and I'll continue down the screen here. That's probably the best. I think that's the best answer for you.
And then we
Okay.
won't even go onto that page though, if the person took the standard deduction.
That's correct. If they did not itemize in the previous year, then you can ignore that. You don't have to enter any data. And then one other thing I'll point out, you don't see a lot of this, but when you do, it's not a mystery. You simply follow the steps. You'll have someone who has been issued a 1099-R as in Romeo. And what that means is perhaps maybe it is, let's say it's a pension. And so someone is receiving a pension, and we'll populate this as best we can. And so let's say somebody gets a pension and their gross distribution happens to be $10,000. And then on the 1099-Rs in Romeo, it says taxable amount is not determined. And when that says taxable amount is not determined, that means you, the VITA volunteer, will determine the amount of the distribution that's going to be taxable. And even though this auto-populated, this is where you would go. You would click here where it says, click here for options. Again, the scenario is we have distributions and we have the taxable amount not determined. So we click here for the option. And we go to what is called the simplified method worksheet. And then where it says simplified method, you can read that material, hit continue. And then you're going to come to this particular worksheet and you're going to start answering the questions to determine what portion of that $10,000 distribution is taxable. And so, for example, you have some type of pension or annuity. Let's stick with pensions for now. And someone has what is called cost or basis in their pension. If they have cost or basis in their pension, that means when they receive their distribution, a portion of that distribution is not taxable. And that's where you would answer these questions, where it says planned cost at annuity start date, the start of the annuity or a pension, whether or not it is a joint or survivor annuity, you'd enter that data. And then you'd answer this question, the age of the recipient or recipients at the start date. And then let's say, of course, we're in tax year 2023, the number of months that it was paid. You might have a previous amount recovered from previous returns. So there's a lot of information the taxpayer would have to provide you, again, to determine the taxable portion of that pension. So again, I just remind you, you might see this from time to time at the VITA site. It's called the Simplified Method Worksheet. And when you hear the term basis, and I'll give you an example, I'm a retired IRS agent. And when I was an IRS employee, I contributed to my pension. And so every year I get my pension check or checks. And so what that means is every year I recover a portion of my contribution. Well, my contribution that I recover is non-taxable. So if I have that taxable amount not determined, I would use the simplified method worksheet. All right. So let's go ahead and hit cancel, get out of that. And then let's go to the next section, cancel, get out of that. And then you might remember this red garbage can. This makes things go away. Every once in a while, you're going to be making entries and the entries are so garbled. You say, you know, I just want it to go away. That's easy enough. You hit the red garbage can and your entire entry for that particular topic goes away. Okay. All right, let's go to our insurance. And for most your taxpayers, this is going to be a pretty basic entry. Most individuals are either going to have a 1095A or they're not going to have a 1095A. So it's either yes or no. If they're in covered California, they're going to be issued a 1095A. And that would be a yes, and then you'd follow the prompts. We'll do that for the next return. In this case, they are in Medicare. And so they are not in covered California, but they do have health insurance. And then for the state, I'll just open this up because every once in a while you'll be opening up the state of California. That would be the blue in color pencil. You go through the series of questions here. And then you might remember this, go through the series of questions. Use tax, you typically don't see that at the VITA site. That's usually going to be 0. Okay, we got that. And then we're going to get to the state of California return once we get past this. Okay, here we go. And so you might remember our discussion from last week when we talked about conformity and nonconformity. Sometimes you're going to have items that'll be subtracted on the California return. And so, for example, the one we gave you was the California lottery, taxed by the federal government, not taxed by the state of California. And you can see there's a number of items here. So let's say, for example, you had someone who won the California lottery. Usually they're going to have some type of information return, some type of document that'll evidence the amount of the winnings reported on the federal side of the house, and on their California return, that would be a subtraction to California, and that's where you'd enter that data. Okay, and then another thing you may see from time to time is this health care shared responsibility tax. And that's the California Form 3853. We'll open that up. And this is usually the question that you're going to be answering. Do they have full year minimum essential health coverage? And that's a long term to describe, do they have health coverage under the Affordable Care Act? Most individuals will have health coverage because if they are low income, a lot of individuals are in the state of California program known as Medi-Cal. For your seniors, for the federal side of the house, that may be Medicare, and of course they're typically paying premiums for that. If you are looking for an exemption, and this is what I do, when I'm helping out a client, if they don't have health insurance, I'm going to ask them, are they indigent? I'm going to ask them, can they afford it? Why don't they have insurance? And a lot of times they're going to say, I can't afford it. I'm going to go ahead and indicate for that taxpayer that there's some type of exemption where it says coverage exemption. And that is a situation where when you enter that data, the taxpayer is not going to be paying that California shared responsibility payment, that penalty. And so I don't think in the VITA sites that I've worked at, I don't think maybe once or twice we had to assess a penalty for someone who did not have health insurance and could not qualify for an exemption. Okay, let's go to finishing the return. And let's see if we've addressed everything. Okay. Now, this is professional software. This is a little bit different than the VITA software, but this is the only game in town right now, so we're going to use it. Okay, ERO, this is something you don't need to worry about. That's electronic return originator. That's the person at the VITA site who will be e-filing returns. Amount due, federal amount due. In this case, they've got, they owe $408 to the federal government. And so if they want to mail the payment, they can do that. They can do a direct debit from their bank account. And usually those are the two choices that you're going to pick. I always tell people it's probably quicker, easier, saves you a stamp to do direct debit. And with direct debit, you can pick the date that you want to obviously have the monies come out of your account. So let's say for argument's sake, we'll say mail payment on this one right here. And for the state of California, we look over here on the right-hand side, and it is green in color font. And so that's going to be a state refund. And I highly recommend direct deposit. Every once in a while, you're going to have a taxpayer who says, I'm not interested in direct deposit. Okay, then guess the option would be a paper check. But direct deposit, you want to encourage them to do that. It saves a lot of time. It saves money. It saves hassle. I gave you that horror story about my paying client who's now waiting for 7 months for his substantial refund. And so again, direct deposit would avoid all of that. And then, of course, you would pick a PIN, personal identification number, in the software. Now, this is professional software, so you'll see some of the differences. I'm not gonna e-file. We don't utilize this page for collecting fees because we don't charge in the VITA program. So in this case, we'd have a checking account. And so for our taxpayers, we're going to utilize that Bank of Pecunia. And then our routing number, let's see if we can get the software to agree with us. And this is something that you may have with the VITA site. Your site coordinator may have a list of the popular banks, the routing number. The routing number is, I would almost call it public information. You can go on the website and you can typically find the routing number for financial institutions. That's not secret information. It's available. I've been able to find routing numbers on the website all the time on the internet. Now, the bank account number is a different story. In this case, we've got a bank account number, and this is something that your client will guard carefully. You should guard it carefully. This is sensitive information. And you can see in the software, you're going to be entering it twice. And what's really important is when you enter that data, you want to make sure you're accurate. I'll be the first to admit I've entered data, thankfully not for a VITA client, but for a paying client one time. I entered incorrect bank account information. My client was not happy. He didn't fire me, but what he did do is he had to wait for a few weeks for his paper check. But you want to get it right. And during our quality review, we ensure that that quality reviewer looks at the bank account number and routing number to ensure that it's going to the right account. Okay, we hit continue. In this case, it says the routing number, and this is an example where the software is going to tell you, hey, you did something wrong. And in this case, it's looking for particular routing numbers. So I'm not going to waste any time in this. So we'll just save and return. So hopefully you kind of get the idea where to enter the data. Wants us to fix it. I'll save and exit. Maybe I can get past that. Still wants us to fix it. Okay, no worries. I think you get the idea. Let's go back to the return itself. And let's see if we need to address any other items here. So let's go ahead and do a preview the return. Point out a couple things. Okay, Sean, can you see the PDF document?
Nope, not yet.
Okay, so we're going to go
Thought I
ahead
seen
and,
text layer.
all right, okay. Show you
Now we see
this.
it.
All right, and I'll try to make that a little bit larger if I can. And looks like I'm striking out here, but that's okay. On the next one, we'll have it rare to go. Okay, strike three, as they say in baseball. Okay. All right. Well, I'll tell you what we're going to do. I've got this already pre-populated, so stand by. Let me go ahead and open up the return for our taxpayer, and that would be the Walters. And then Scott, let me know if you can see, once I load this thing, if you can see the PDF document.
Success.
Yes.
Yes.
All right. All right. We're cooking with gas. Okay, here we go. Just want to point out a few things. The roll-up page, this is the one that you're looking at currently. It has the various forms. It has the refund amount or the amount that's owed for federal and California. It has the facsimile. Well, before we get that, it has a disclosure. This is the global carry forward that you're going to see. And the whole idea behind global carry forward is if a taxpayer goes to another VITA site, if they agree for carry forward, this saves time at that new site. And most people will agree to that. Of course, they're going to select a PIN. This is something that you're going to see, the 8879. It has to be signed by the taxpayer, and this is for electronic filing. And most of our taxpayers want e-filing. It's quicker, especially if they have a refund coming to them. And this is another thing you're going to see. You're going to see vouchers. Taxpayers owe, and when they owe, they can pay by direct debit. It's probably quicker, but some people say, I want to write a check. If they want to write a check, we give them a voucher, and they'll go ahead and send that voucher into in this case, the IRS, with the amount that's owed to the correct address by the due date. You also have in the software, it'll generate the address. In this case, the address for California taxpayers is going to be based in Cincinnati, Ohio, to send that check. This is the SR, which is the senior return, and that's for someone who's 65 or older. And you can see I've got our taxpayers here. We can see the taxable interest on line 2 Bravo. On 6 Bravo, you can see that even though they receive Social Security to the tune of $46,000, there's still a small portion that is taxable. And your software does that automatically. And then if you go to the second page, you'll see on line 7, that's the capital loss. Total income is on line 9. There's adjustments to income. That would be the 1/2 self-employment tax. And then their AGI. And when you hear the term AGI, adjusted gross income, that simply means your total income less your adjustments. In this case, they have the standard deduction and that additional amount because the taxpayer husband was considered for tax purposes blind. And then if you actually do the math, they have what is called negative taxable income. In the VITA program, the software will only put the number 0. It's not going to be a negative amount. And so that means they owe 0 individual income tax. And then if you look here on line 23, this is that self-employment tax that the taxpayer wife is paying. They have withholding, and that withholding was from their 1099 or specifically their SSA 1099 from Social Security. And then you can see the differences, what they owe. And again, highly encourage you. I mean, it's not a requirement, but highly encourage you to inform the taxpayer. It's probably better to have that direct deposit so they don't have to chase down their checks, their refund checks. And again, sometimes it's many, many weeks, in some cases, many, many months. Okay, a couple other things we want to point out. This is that standard deduction chart, and that is for all filers. And of course, if you have someone who's married filing joint and they're both seniors and they're both blind according to the tax definition, this is the amount of their standard deduction, $33,700. In our particular case, we had both seniors, and then the husband was blind for tax purposes. His standard deduction is $32,200. And then this is your Schedule 1. This is the amount of net income from the Schedule C, that $13,500. And then down here, that's that settlement amount. And so I think I mentioned before, when someone tells or informs me, hey, I've got a court settlement, and they ask me, Jerry, is it taxable? What I'll do, if I know it off the top of my head, based on the fact pattern, I'll say, yes, it is or is not. If I'm not sure, and that's going to happen, whether you are a certified public accountant, licensed attorney, tax attorney, enrolled agent, VITA volunteer, you're just not going to know certain things. And so what you want to do, you want to look those answers up. But in this particular case, we did from the publication 525, that particular settlement for lost wages was a taxable event. This is that 1/2 self-employment tax deduction, and that'll be reflected on the Schedule 1, Part 2. And then additional taxes, we have individual income tax. Typically, you'll see self-employment tax at the VITA site, and then you might see this item number 2 or line 2, the excess advance premium tax credit repayment. And that's a long term for meaning if someone received too much of a subsidy from Covered California, then they've got to pay it back to the federal government. Or stated differently, they received that subsidy. That subsidy actually was from the federal taxpayers. Okay, there's their self-employment tax. Now, this is the Schedule A as an alpha, and this is going to automatically appear in your software, but we know we're going to take the standard deduction or the itemized deduction, whichever is greater. This simply is the Medicare premiums that is carried forward over to the Schedule A as an alpha. But again, the individual did not take the itemized deduction. They took the standard. Here's your interest and dividends. In this case, you just had dividends. I stand corrected, interest only. Dividends are down here if they do have any dividends. And this is the document they're going to receive, that 1099 DIV. And sometimes the 1099 DIV is going to be embedded in a 1099B. Here's your Schedule C as in Charlie. And this is the self-employment. And you can see the income, which appears on line 1. And in this case, she only had supplies, and that would be on line 22. Sometimes you have a laundry list of expenses, and you'll itemize them out, and that appears on line 27 alpha. And then you can see the net profit. That's the bottom line, if you will, that 13,500. I think that might be as far as I want to go. Well, let's see, capital gains, we do have that. Capital gains, usually you don't see a lot of this in VITA, but again, you're looking for that 1099B as in Bravo. And in this case, they had long-term capital gains. And all that means is they held this capital asset for over a year. They disposed of the capital asset, which means they relinquished title, i.e. they sold it. And in this particular case, they had a loss of $2,000, which again is taken on the return. Here's page 2. This is the 8949. Basically, it's the precursor to the Schedule D, if you will. It differentiates between long-term and short-term. And you might remember long-term dispositions. We're talking about if there's a gain, that means the preferential tax rate for the gain as opposed to the ordinary income rate for the short-term gains. Here's your self-employment tax form, the SE form. It simply calculates self-employment tax on the net income. And then you can see the bottom line on line 12. And then that 1/2 self-employment tax deduction based on the amount of the self-employment tax. This is a very busy sheet, but this is also an important sheet when you have someone who's got long-term capital gains, or maybe they have some qualified dividends. Those are taxed at different rates, and so this particular sheet will calculate that. And I think that pretty much takes care of what we need to talk about here. This is something to keep your hands on. This is the capital loss carryover worksheet. Your taxpayers will bring their tax return from the previous year, and sometimes they have a capital loss carryover. In this particular case, they don't take a tax benefit of the capital loss carryover in tax year 2023, and so it carries forward to tax year 2024. And of course, there's a differentiation between the short term and long term. So this is something you look forward to, and you'll make those entries in the software for the current year. And you may get this question. Some people say, why are my Social Security benefits taxed? And without being flippant, I usually tell them that's easy because the federal government has passed legislation and it has passed mustered in the court. And that's something that's in some cases taxed in part. In your case, this taxpayer, there's a portion of their benefits are taxed because of federal tax law. And that usually answers the question. California return, probably the only thing here, just a couple things. We'll run through this. You can see here, this is a senior couple, and so they get the personal deduction. We have the husband who's blind according to the definition. He's going to get that exemption. And then we have two seniors and they get the exemption there. So their exemptions total $720. That's line 11. And then it shows their adjusted gross income. There's that subtraction, and that's reflected automatically. No change. Software does that automatically. And then you can see down here on line 18, this is the standard deduction for California, and it's different because California tax law is different than federal tax law. Taxable income is a little over $1,000. This is their total tax liability to California, $11. Their exemption is $720. This is it's non-refundable. So what that means is a dollar for dollar reduction of the tax, which means the $11 of tax is gobbled up. And then this particular client, they had the renter's credit. They can't take advantage of it because it's non-refundable. And then because we have a low income client here, they're eligible for California earned income tax credit, a small amount. Software calculates that automatically. So that's a good thing for them. And then that $163, that's going to carry all the way down to the last page. And this is going to be the refund, California refund based on that California earned income tax credit. And then you'll see this on the tax returns. You'll see the routing number and the account number, and that would be for direct deposit. Again, highly, highly encouraged. Okay, I think that takes care of it. So let's see. Sean, we'll come back. Let's take 10 and we'll talk about the Maria Adams tax return.
Okay, let's take a 10-minute break.
Sounds good.
All right, so first question is, if you're working on one of those annuities or pensions and the taxpayer doesn't know the cost at the annuity start date, what do you do?
Yeah, there's a couple things you can do. One, you can automatically default and state that the entire distribution is a taxable event. And then at that point, then if the taxpayer gets additional information, then an amended return could be filed. Or you could simply wait and the taxpayer can reach out to the company that they're dealing with and say, hey, what is the information I need to provide to my tax preparer to only pay a tax on a portion of the distribution?
Okay, second question, and I know the answer to this, but you can answer if you want. If someone lives in your household, they're not your dependent, but they don't have health insurance, how's that handled?
Yeah, if they're living in your residence and they're not on your tax return, that means they're not part of what is called the tax household. And so they're like that one line in the movie, they're on their own.
Yeah, but they're going to have to file taxes on their own too, if they
Well,
have a
and
filing
sometimes,
requirement.
yeah, if they have a filing requirement, and there's a lot of taxpayers, young and old, who do not have a filing requirement. And that's a good point. If you're a taxpayer and you don't have a filing requirement, then don't file the return. Now, there are some people who will file the return because they want to. So, for example, at my site, we have seniors that come in, and these individuals are in their 70s and 80s, and they don't have a filing requirement, but they want to file a return. And I will direct my staff to file a return for these taxpayers. That's a service that we provide to them. Again, it's something they want to do.
Mhm. Okay, then final question in the chat is, it's really more of a statement from Nancy Liming that if you check no on the form about if you live at the same address that's on the return, then the software will automatically only let you get a paper check in California.
Oh, that's an excellent point. Yeah, excellent point. And usually your address is going to be the same. Your residential address will be the same as the address on your tax return.
And just to add a point, the default is no, so you have to change it to yes. If they, if they live in the same place, so that it automatically will get a electronic check. Because some new people, one person had, didn't know to do that, and it said it was going to be a mail check and wanted to know why. So we had to go back and check
Mm.
yes.
Yeah, that's a good point, and I can't tell you how many times, not only in my personal life, but also with my clients, paying and non-paying clients, where chasing down a check is just difficult. It's time consuming. It's frustrating, and you just want to avoid that. All right, Sean, any
Okay,
more
that's it.
questions?
Nope, that's it.
Okay, we're going to jump into the Maria Adams head of household return. And again, just a quick reminder, I'm using my software from my practice because for some reason I just couldn't log into Lincoln Learn and use the practice lab. But again, this is very similar to the practice lab. So it'll work for our purposes. So we're to filing status. This is probably the more difficult, the more challenging filing status head of household. I highly recommend if someone comes to the VITA site, you always get into a habit of using that decision tree in the publication 4012. And in this particular case, we've got Maria. There's no mention of a spouse, and she has a minor child, and Maria pays the bills for the household. And so that means she qualifies for that head of household filing status. Okay, we're going to go ahead and put in our administrative information. And we're going to make our taxpayer. She is approximately 30 years of age, a little over 30. And back to this laundry list, typically the only things that you'll address here will either be someone has met the definition of blindness according to the tax provision. You might have a decedent. If you have a decedent, typically that is the taxpayer. They passed away, and then maybe the mother or maybe the brother or sister is asking for that last refund. And then, of course, you get the death certificate, and you'll fill out an IRS form 1310. And then, of course, that presidential election campaign item, you'll see that from time to time. Okay, we'll throw in an address for our taxpayer. And we'll make this local. Okay. And we'll throw in a phone number. And we'll throw in an email address.
Did you want to update the resident state field, Jerry? Because it was staying with New Jersey.
Oh, look at that. Look at that. Very good. Yeah, it just popped up here. So let me go ahead and change that. Bounce around. I don't think we'll be doing New Jersey anytime soon. Unless you move to New Jersey.
Well, it's because the original zip code you had was New Jersey, so it populated all that automatically.
One of the many, many mistakes I've made in my life.
That's where I fly my drones is in New Jersey.
Hey, there's nothing wrong with New Jersey. I think I've been there once. All right. And that's also a point when you're doing VITA, the only returns that we prepare are California returns. We don't do any other states. Sometimes you'll have taxpayers pleading with you, begging with you, and just like the line in the movie, just say no. We only prepare California returns. We don't do part year returns, and we do not do non-resident returns. Okay, back to Maria. We do have a dependent child, and this is Alma. So we're going to go ahead and enter that. And Alma's a little girl. She was born back in 2018. This happens from time to time at the VITA site, and so don't get surprised. Sometimes you'll ask someone the date of birth of their child, and they'll say, I don't know, I don't remember. And usually through photographs or going through their purse or their wallet, they'll figure out the date of birth of their child. Usually you're going to have a social security number for a minor child. That's typically not an issue. And then most of your minor children are going to be either US citizens or resident aliens. Then your drop-down menu. Sometimes you're going to have maybe grandparents who are watching a grandchild. They have custody of a grandchild. That happens for various reasons. But in this case, we've got a daughter. And the daughter lived in the home for 12 months. And you have the drop-down menu here.
So you want that to be parent or daughter
What did I select?
on the relationship?
Okay, let's see here. Let's go ahead and, I think I had a block in the way there. Hold on a second. Let me see if I can find daughter here.
There it is. Yep, you had it. Went up. There you go.
Yes, yeah, something's in my way there. Okay, there we go, daughter. All
Sorry.
right.
Thanks.
So thank you, thank you. So we got the daughter for the relationship. Now down here, probably the only tab you're going to enter, you might have a minor child who's also a young adult, and maybe they're going to college. And so you would check they're over 18 and they're going to some school. When you hear the term eligible education institution, that's going to be through the United States Department of Education. And that's usually going to cover your colleges, community colleges, four-year colleges, private colleges, things like that. And then, of course, if you had other children or other dependents, then you would add them. And then let's go to this part right here. I wanted to point this out. Sometimes you will have that IPPIN, and if that's the case, taxpayer is usually going to have a letter from the IRS. And the whole idea behind that is you can still electronically file a return if you get the IPPIN. And again, they'll have a letter. Okay, out of there. All right, and then we're to our page, and this is the one you're going to get really familiar with. And we've got a taxpayer who's a wage earner. Couple points here. Sometimes you may have a corrected W-2. And I always tell the story when I was an IRS employee one year, I was issued a W-2. It was incorrect. I went back to my IRS personnel department and said, hey, you guys gave me an incorrect W-2. They corrected it, and I was issued a corrected W-2. So sometimes you're going to see that. Okay, we've got our employer. And in this case, we'll throw in an EIN. Federal EIN and state EINs are going to be different. So this is the federal. And we've got a bank. And US. And we've got an address. Okay, we're good to go there. Here, this is where we use the mantra, you're going to enter data as you see it on the W-2 or key it as you see it. That's the general rule. So in this case, she's got gross wages of 32,000. And then of course, we see the auto population in box 3, 4, 5, and 6. Typically, you're not going to make any changes to that auto population. If you need to, it's real simple. You go over to the number, you click on it. Let's say it's 463. We'll change it to 463. We have federal tax withheld for our taxpayer to the tune of $1,700. And no other items here. Box 12. This is something you're going to see a lot of in the VITA site. And typically the codes that you'll be dealing with will be D as in Delta, that's deferred compensation. Deferred compensation would be typically what you may have heard, a 401k, a 414, a 403b, a 457. Those are all code sections in the Internal Revenue Code for deferred compensation. And then Delta Delta, that would be health insurance paid by the employer on behalf of the employee. So those are typically the two codes that you'll work with. And then over here, if the W-2 indicates the retirement plan is checked, you would check that in the software. And then down here in box 12, typically what you'll see California SDI, and that's exactly what we have for our client here. Our VITA client pays a total of 140, and this is tax that is or premiums that are collected by the employer, remitted to the state of California. And when the individual qualifies to meet the disability insurance payments, then what happens is they apply and the state of California sends them a check until they're back on their feet, if you will. Your state information, again, we only work with California. And then the EIN is going to be different from the federal EIN. We key it as we see it from the W-2. State income tax withheld for our taxpayer here is going to be $800. We mentioned before, box 18, 19, and 20 are not used in the California VITA program because there's no jurisdiction in the state of California other than the Franchise Tax Board that has some type of income tax, or stated differently, individual income tax. If you had another W-2, then you would, of course, you'd enter that data there. That's pretty typical at the VITA site. You might have 2 or 3 W-2s, and then you would simply make those entries. Okay, in our fact pattern, we've got Maria. She also served on jury duty. And so we're going to go to other income. And we're going to indicate in other income that she has received jury duty pay to the tune of $90. And then this is important. When someone receives jury duty pay, then you're going to ask them the question, did you cash the check? Did you put it in your bank account? Or were you required to relinquish the check to your employer? Sometimes they have to give their employer their check back. Like when I was an IRS employee, when we were on jury duty, we had to give our secretary our checks because we were on full pay and allowances when we were on jury duty. And so when you give your check back, step number 1, you report your check because you received it. Step number 2, you're going to take what is called an adjustment to income. So we're going to go over here to the federal section, and we're going to open up adjustments to income. And that would be under deductions. And you'll see the adjustments. There's a number of adjustments, and I think we talked about a couple of these before. Typically, you may have educator expenses, and that's someone who's a K through 12 instructor, and they have to meet certain requirements, and they're pulling money out of their own pockets to pay for supplies. It's very typical for a school teacher to do that. And so there's an adjustment to income that taxpayers can take for that. Another item that you're going to see a lot of is you're going to have taxpayers who contribute to an individual retirement arrangement, and they can take what is called a tax adjustment to tax based on their contributions. And so that would be the traditional IRA contribution. Student loan interest is another adjustment to income, and you'll see a lot of that. Just about every young adult I know pays some type of student loan, the ones who've gone to college and borrowed money. And then here's our taxpayer, Maria. She has relinquished her jury duty check, so she takes that jury duty pay adjustment to income. But again, step one, you report the income. Step two, you take an adjustment if you relinquished your check to the employer. And that would be an adjustment for her. And then we're done with adjustments. There's no other adjustments. We're going to go back to our income page. And then this is similar to what we had from the previous tax return. We had Maria, she sold a stock. And just a couple things here. We'll open up this. And again, you should become very familiar with this with the VITA site. And typically what you're going to be using this for is reporting dispositions of capital assets. If someone sells cryptocurrency, we cannot assist them at the VITA site. And a lot of times they're going to say, well, that's not really that hard to calculate. And you can say, that may be true, but we're not trained to do it, so we don't do it. And so your options are you would find someone else or go out in town, but we don't do this at the VITA site. If you sell cryptocurrency, if you buy cryptocurrency, different story. We can assist you with your return, but not sale. Capital loss carryover, you're going to see this from time to time. If someone has it, it's going to be on their previous return. You would open up this particular tab and you would enter the data from the previous year. And it says right here, you have to differentiate between short and long-term carryovers. And of course, you would enter the information as a positive number. So you would not put a minus or put it in parentheses. You would enter that data. And what that means is there's a limitation to the loss for a particular year. And if you can't take the loss for a particular year, or you only take a portion of it, then the rest is carried forward to the next year. And losses are carried forward until they're used up or the taxpayer is used up. Once a taxpayer passes away, the loss will pass with them. We don't have a lot of this, and I probably have to defer to maybe Sean. Sean, I don't know if you saw a lot of sale of a main home last year at the VITA site. I'm not sure.
No, in previous years there was more of that. Last year's pretty slow. Maybe
Okay,
3.
yeah, you don't see a lot of it, but when you do, typically this would be my recommendation. You're going to do what you're going to do, but you're probably going to go to your senior VITA preparer to help out because you want to make sure you do it right. You have to get information pertaining to the settlement statement. You have to make sure you have adjusted basis correct. And with that data, you're able to calculate the sale of a main residence. Okay, we're back to capital gains. And in this case, we've got Maria. She sold some shares in a corporation. And we've got a date that she sold it. And the date that she sold it is going to be in current tax year 2023. I'm sorry, date acquired. I stand correct. Date acquired. Date acquired. She purchased it in 2023. And she sold it in 2023. So what that means is, based on the dates that I'm entering here, this is going to be a short-term disposition. And she sold everything for $1,200. And you might remember this. Typically, it's going to be that's 1099B as in Bravo. That'll be the brokerage statement. And then we have the cost or the basis of the shares. She bought them for $1,500. So now we know we have a short term, and in this case, it's going to be a loss. You can see that. And if you had another 1099B or another transaction, you'd open up that tab where it says add a capital gains transaction. Okay, let's go to our next one. And our client, our VITA client, is on Covered California. So we go to health insurance. And we talked about this, non-negotiable. If you're in Covered California, you've got to have the 1095A. If you don't have the 1095A, then a couple options include we can't help you, or can you come back with that document, whether it be later on today or maybe next week? And so this is the document that's going to be provided to the taxpayer, because this document has information pertaining to the dividends, I stand corrected, pertaining to the premiums paid by the taxpayer, and also the subsidies that the taxpayer has received from taxpayers like you and me. Okay, so they did receive a 1099, a 1095 alpha. We open that up. And in this case, we go to this section. This is what is called the tax household, and it lists the folks on the return. And we're going to enter the questions. Typically, it's going to be none of the above for the allocation. Where it says repayment, the answer is typically going to be no. And then this is, and I'll read this verbatim. Hopefully you can see it. It says, do all 1095As include coverage for January through December with no changes in monthly amounts? And in this particular case, that is correct. So we'll say yes. And then it gives us this particular screen where we've got to enter the data from line 33 alpha, 33 Bravo, and 33 Charlie. So we enter that, and let me go ahead and enter that data. And then we hit enter. And then this particular screen talks about income from the dependent. And we have a minor child. She's about 4 or 5 years old, so we don't have any data there. And so we're going to leave all of that blank. Sometimes you will have income from the dependent. You might have a young man or woman, maybe 18 or 17, something like that. And that could be, and that's where you enter the data. Look at that. Sean, we still have New Jersey. All right. Well, you know something? What's that one saying? No one's perfect. But anyway, we're going to go back to
We
our
just-
federal return.
You can
So
just delete it and add another
Yeah,
state.
right.
Oh, you know what? We'll try that, but let's go back to the federal return, make sure we've addressed everything here. So we've got the income from W-2. We got the capital gains from the disposition of the asset. We have the other income, that's that jury duty. And then we have the earned income credit. And the earned income credit, of course, is based on the fact that we've got a taxpayer with lower income, if you will, and she meets the qualifications. She's got that dependent child. And then that other adjustment was from the jury duty pay. And then we've addressed the health insurance, and then we're going to come here to the e-file. Kind of a reminder. Now, of course, we have the wrong state, so we're going to go ahead and hit continue here. And I think what we'll do, I think we'll add, we'll try this. We'll try this once. If it doesn't work, then we'll talk about it. We'll add, here we go. We'll delete New Jersey and add California. There we go. All right, and if you're not a geography major, then you can kind of do one of these numbers. Pick your state. And then again, we only do the resident California return. That's all we do. And then what should happen, we should answer a few questions and it should populate California. So it's asking us about the 3532 head of household. We'll answer the questions. And again, this looks real similar to the software we're going to be using at the VITA site. Alma's the daughter. Alma did not make anything. And then Alma did live with mom for the entire year. And then there's no mention of a spouse, so the taxpayer is not married. And you might remember from last week, RDP is a registered domestic partner. And the only way you register a domestic partner in the state of California is with the California Secretary of State. That's how that's done. And that could be either 2 males, 2 females, or a male and a female. And then we've got our principal residence, and that's in the county of Orange. Okay, and then yes, the address is the same. And I think Nancy mentioned that if you check no, then you got a paper check. Nancy, you still on? Is that correct?
Yes,
don't-
that is correct. You have
Good.
to say yes. to
And
get
I'll
the-
talk good about Nancy. Nancy is one of our heavy hitters. She's worked at the church. She's also worked at Coastline Community College, and she's a known commodity. She does a really good job.
Thanks, Jerry. You do too.
We do what we can. Thank you. All right, so name change, you're not going to see that. Renter's credit, in this case, Maria does rent her residence. Use tax, typically it's going to be no. You do ask the question though. And in this particular case, she doesn't have any use tax, so we're going to put no. This acronym here is the California Department of Tax and Fee Administration. These are the sales tax people in California. She's got that minimum essential health coverage through Covered California, and her address is the same as her tax return. All right. Head of household. I think we did that, and so we did generate the California return, so that's a good thing. And then just a pointer, you'll probably jump into this form. This is the California Form 3853, and this is that full year minimum essential health coverage. And there's different ways you can get it. In this particular case, our taxpayer got it through Covered California. And as I mentioned before, when you're at your VITA site, if someone doesn't have insurance, you're typically going to find an exemption for them. Most of the time, they're not going to be able to afford the insurance, so it would be unaffordable. I think we shared that with you last week. You open that up, and it talks about, let's see here. I think this one right here. Let's just do this, kind of show you one more time. And here you go. Here's your laundry list of your various exemptions. Some you find on the return, others, I think the one I've used most of the time would be coverage is considered unaffordable. And this would beg a lot of questions. You'd start asking them about their revenue streams and about their expenses. And if it's unaffordable, it's unaffordable. Occasionally, we'll have individuals who are incarcerated, but usually unaffordable. Okay, I think we're done with that. And let's see, Sean, I'm looking at the clock. We've got 11:51. I think this is probably a good opportunity to kind of go to questions for both me and maybe you. And so let's take questions from the crowd if anybody has any questions.
Well, there was one thing came up in the chat when you were going over um, data from previous years and saying that we'd have to ask the taxpayer to get it if they didn't bring it with them. But Adela, just want to point out that if we did their taxes at the VITA site last year, or if they did it at a different VITA site and signed the global permission thing, then that information's in the computer already and we can pull it up. And for the new and maybe less experienced folks, if you haven't done that, we can get into how to pull up old information when we get to the VITA site.
Oh, great point, because a lot of your VITA clients are going to be returning. Some of them will be brand new, which means they're going to bring in a hard copy of their previous year return. But either way, you want to take a look at it because that previous return is going to help you in preparing your current year typically.
Yeah, and I'm not sure what your clients look like at Coast. I think a lot of yours are like college students, but with St. Killian being one of the only all walk-in sites, we do tend to get a lot of homeless people, and they don't always have really good records. So sometimes it's hard for them to have last year's paperwork, and if it's in the computer, it makes life a lot easier.
Okay, very good. All right, any other questions?
Not seeing any. If anybody has a question, you can always unmute yourself and ask right now.
Well, I'll advertise for Coastline College if individuals want additional tax preparation experience as a VITA volunteer, you can come to Coastline College, and we have our site on Fridays, most Fridays during the season. And I'm the site coordinator. We'll have a number of people there. And Sean, I'm going to throw my phone number out if someone's interested in volunteering at Coastline.
Sure.
My phone number is area code 949-633-6378. And then I mentioned last week, if you want face-to-face instruction in the VITA program, Orange County United Way is providing that instruction at Irvine Valley College in January. I'll be the instructor. You can call me and we can bring you in and you can sit down and have face-to-face instruction with other students.
And
All
Jerry, you
right,
said it
Sean,
was,
back to you.
that was 949-633-6378.
Yes.
I'm putting that in the chat if anybody wanted to copy that.
Yeah, and sometimes sometimes they're younger and sometimes they're older volunteers and they just want that face to face. They want to look at a
Mhm.
screen. They want to have that immediate feedback. They want to work with other volunteers, and so sometimes people like face to face instruction.
And Jerry, you do know we're recording this, and that's going to go on the YouTube channel. So
That's okay because my
Okay.
wife has shown me how to block numbers on my cell phone.
okay. First in-person meeting for St. Killian. Robert Andrews is asking that, and that's going to be on the last weekend in January. We're going to get together the last Saturday. We will not be inviting our clients in that day, but we're just going to walk through everything, make sure everybody's familiar with all of the procedures and how the equipment's set up. We're going to verify all the IDs and certification forms, make sure everybody's ready to go. And then for other sites, you're going to have to check with your own site coordinator, see when you start.
Hey, Jerry, I have a question. Use
go ahead.
tax. Is use tax basically where you buy something outside of the state and then you bring it back home? And
Yeah, that's pretty much what you're going to see. So sometimes individuals will buy a big ticket item like a recreational vehicle or a motor vehicle. They'll pay the sales tax in the state, they'll bring it to California, and then they are shocked when they go to DMV and they go, "What do you mean I got to pay tax?" And the DMV says, "Yes, the difference between, let's say it's 9% in California and you're paying 5% in Iowa, then the difference is in that case 4%, and that would be the tax you'd pay the DMV, and that would be use tax."
But say you're on vacation somewhere and you're buying souvenirs, that they're not going to care about that, right?
I think the short answer for souvenirs, probably not. I know if you buy hamburgers and French fries in
You're
Vegas,
consuming them outside, so it won't come back.
yeah, but if you buy a big ticket item, yeah, you're required to pay use tax.
Okay, thanks.
Sure.
So Jerry, another question. Kim's asking if you can go through Form 2441.
Oh, I
Not
don't know
sure.
if we have enough time to do that because we've got 11:56, but I will do this. Let me go ahead and load up let me load this up here.
Okay, while you're loading that, I'll give a couple more examples of the use tax. My son is kind of a computer nerd, and he's always buying stuff from Japan and China and having it shipped directly, and they never charge tax, so then he winds up having to pay tax on that. And as far as like buying souvenirs and stuff, I do have a cousin who's has too much money, and he bought a bunch of Rolexes once and brought them, and the people stopped him at the border and said, we need you to pay tax on that.
Okay. It said don't buy too much.
There you
Okay, got
go.
it.
And it's a
Nope.
question. So real quick, just a couple of takeaways here for the IRS Form 2441, and that's a child and dependent care expense credit. Typically, it's going to be used for mom or dad who's going to work and they're dropping off their daughter or son to daycare. Someone's watching that child. And usually that someone is going to be a firm or maybe an individual. An EIN would be an employer identification number, and that would be that receipt that's given to the parents by the firm, i.e. the child care company. Or if it's an individual, then the individual would have, like my child care provider was a private individual, and so she had an SSN. So you provide that information in the 3441. And then, of course, then you'd also indicate data about what you paid that child care provider, i.e., $3, $4, $5,000 or whatever. And then there's a limit for each child. And keep in mind, let's say you pay a total of $6,000 for the entire year for two individuals. That is not the child and dependent care expense credit that's used to calculate the credit. And so it's important to know that, again, whether it's tutor time or a private individual. And here's another thing. If you have someone who is undocumented watching your child, then typically they'll have an I-10 and you can still take the child and dependent care credit. Now, you may not be able to electronically file, it depends. But again, they're watching your child, but you have to provide that information. And this is something that a lot of taxpayers have. So hopefully that helps out. John, regarding the 2441.
I think that answers it. You know, we had a funny situation last year where two taxpayers came in and they were related to one another, and each one was listing the other one as caring for their children, and that raised some eyebrows.
Yeah, when that happens, you have, if returns are filed, and they can, in some cases, be paper filed, then you have, it goes to an examiner, it's called the whipsaw effect, and the examiner makes a determination who's entitled to that particular credit, and then the other individual, that credit is denied to them, and they end up getting a bill.
Yeah, we didn't file it that way.
Yeah, that's another option.
We advise them not to ask for trouble like that. Not worth
All right.
it.
Okay, folks, I'm going to give it away to Sean. Thank you so much for your
Okay.
participation, and I wish you the best at VITA.
Okay, thanks a lot, Jerry, for all your help over the years.
Thank you, Jerry.
All right, take care, everybody.
you.
Thank you, Jerry.
All right,
All
take
right.
care. Bye-bye.
I'm going to